The turmoil in Ukraine is spooking global financial markets, unsettling investors already nervous about shaky emerging markets' economies. Russia's stock market and currency tumbled to levels unseen in recent years, dragging down markets around the globe. Song Ji-sun reports.
Western leaders are threatening Russian President Vladimir Putin with economic penalties for his troops' intervention in Crimea, but the financial system is already punishing him. The Moscow stock market suffered its biggest loss in more than 5 years on Monday, and the ruble tumbled sharply in a nervous reaction to Kremlin's gambit in Crimea. The benchmark MICEX closed 11% lower in Moscow, its biggest loss since November 2008. Russia's central bank tried to contain the plunge in the ruble's value on Monday by raising its key interest rate by 1.5 percentage points to 7%. It was the largest interest rate hike since the global financial crisis in 1998. Stocks in global markets stumbled across the board, with investors selling off shares, particularly in companies with exposure to Ukraine and Russia. The Dow Jones Industrial Average shed nearly 1% on Monday, but the European markets were hit harder, with the London benchmark Financial Times Stock Exchange ending the day 1.5% lower, and Paris and Frankfurt stocks losing 2.7% and 3.4% respectively. Stocks on the Ukraine exchange in Kiev fell about 12%, and the country's currency fell to a new low against the US dollar. Ukraine faces a possible default on its debt as Moscow is cutting off aid to its limping economy. Asian markets suffered too, with Seoul's benchmark Kospi edging down in early Tuesday trading after closing 0.8% lower on Monday, when indices closed more than 1% lower both in Tokyo and Hong Kong. The uncertainties pushed oil prices higher, with Brent crude futures adding nearly 2% in London, and gold also gained over 2% to $1,350 an ounce to mark its biggest gain of the year. Song Ji-sun, Arirang News.
Now back here in Seoul, the government says the Ukraine crisis will only have a limited effect on Korea's stock market. But the finance ministry says it has raised its monitoring of the local bourse just in case.